Circular 230 Section 10.37 is about written tax advice, and written is way broader than people think. If you put tax advice into an email, a text, a client portal message, a letter, or even a chat message, treat it like written advice. On the EA exam, they love testing that casual electronic messages still trigger the same standards. Once it's written advice, you have to build it on reasonable assumptions. That means reasonable factual assumptions and reasonable legal assumptions. You can't assume away inconvenient facts, and you can't use a legal position that has no support. Think, would another competent practitioner say your assumptions make sense based on what you know? Section 10.37 also requires you to consider all relevant facts and circumstances. You know, or reasonably should know. That should know language is exam gold. If the client hints at something important, you don't get to ignore it. If the situation screams for a follow-up question, you're expected to ask it before giving confident written advice. You also must use reasonable efforts to identify and ascertain the facts relevant to the advice. In plain English, do some homework. Ask for documents when it matters. Clarify timelines, amounts, and who did what. The standard isn't perfection, but it's more than just repeating what the client says and calling it analysis. A big trap, relying on client statements when that reliance would be unreasonable. You can rely on client representations sometimes, but not when they're clearly questionable, incomplete, or inconsistent. If a client claims a huge deduction but can't explain it, you can't write advice as if it's solid. Circular 230 expects professional skepticism when the facts don't add up. Finally, written advice has to connect the law to the facts. Name the rule or authority you're applying and explain how it fits the client's situation. This is where many answers go wrong on the exam. They give a conclusion without analysis. Your written advice should show the bridge between facts, assumptions, and the tax result. Darius is an enrolled agent. He regularly advises clients about the likelihood of being audited if they claim certain deductions or credits. Under Circular 230, is this allowed? The options include, it's not permitted, it's recommended, it depends on substantiation, or there isn't enough information. Think about it. Can you base advice on audit risk? The correct answer is no. This type of advice is not permitted. Circular 230 doesn't allow the audit lottery approach. Advice can't be based on the likelihood the return won't be audited or the issue won't be raised. A tempting wrong choice is the substantiation option, but even well-documented deductions can't be justified by audit probability. Which of the following constitutes a violation by a tax preparer of Circular 230? Choices include giving written tax advice based on audit probability, charging a contingent fee tied to a refund claim for penalties or interest, filing a return with a math error, or advertising to existing clients. Think about which one is clearly prohibited under Circular 230. The correct answer is giving written tax advice based on audit probability. That's the classic Circular 230 violation. No advice based on whether the IRS is likely to audit or raise the issue. The math error choice can feel tempting, but a mathematical mistake isn't automatically a Circular 230 written advice violation in the way the audit probability advice is.